Ben ritrovati sul floor del New York Stock Exchange. Giovedì mattina gli indici sono in questo momento al ribasso, in realtà manca una direzione ben precisa, ancora tante le preoccupazioni legate all'Europa. Ne parliamo con la mia ospite qui sul floor e come vedete come ogni giovedì è Doreen Mogavero, che è presidente, fondatrice e amministratore delegato di Mogavero Lee Co. Doreen, thank you so much for being with us.
Thank you for inviting me. Appreciate it.
So Doreen, we are going down today and we have already lost a lot of ground in the last few days. Greece is back, of course, in everybody's mind. And is the market preparing really for an exit of, Greece from the euro?
Well, I have to say, I think that we've seen nothing but bad news. I mean, honestly, the few bright spots we've had have not been bright enough to really hang your hat on. And today we've had jobless claims, which were worse than thought. So all in all, I think Europe is obviously, I think, the premier focus for everyone, and certainly Greece. I think that people are anticipating that there's going to be an exit from the euro. I think so, from the eurozone rather.
And also there is the contagion fear. I mean, if they really can manage the exit, what is going to happen? I mean, the United States for sure is going to have an impact, from all of this.
What I think a lot of people are looking at is, the U.S. We did this 3 years ago with our economic issues, right? Our crisis, and in 3.5 years, really nothing has improved. If anything, I think some indicators are worse, no matter what the numbers may say. I think unemployment is much worse than it was then. And I think people are saying that this is going to be the same situation in Europe. So I think that everyone is anticipating that this situation deteriorates over the next few years. So that doesn't give us a lot of hope to think that it's going to be a good situation. And as we've spoken about before, when you have a lot of U.S. companies having shifted their focus for their markets, for their products to Europe and to overseas from the U.S. to kind of counterbalance our difficult times, and now those markets will not be doing well, you have to figure that the reason you're getting a lot of caution out of these companies is because they realize this is going to be a long haul for Europe.
Yeah, they're really exposed. And again, Europe is not United States. As you were saying, a few years ago, United States went through a financial crisis, but would it be the same in Europe? I mean, it's going to be easy to really have Germany, France, Italy, Spain, everybody to agree on something.
I don't think so. And I think when the agreement is the same things that we've done here that haven't yielded us a tremendous amount of benefit, I said that's a scary thought as well. I mean, they have a double whammy insofar as you've got to get a lot of different governments to agree on one thing. But I think at the end of the day, if you're all trying to agree on a practice that has been tried and not necessarily been particularly stimulative, then you have a double problem, So I think that they've got to come up with a better solution than the one we had. I think so, because it's obvious that that's just a sort of Band-Aid solution. And, the kicking the can down the road phrase is getting a little old, but I think that's a lot of what we've done here, and it doesn't seem to, as of yet, kicked in to make it a permanent condition. So I think that, Europe's probably in for more of the same.
And talking about what the government could do, a government is going to do, JP Morgan, of course, put again on the spot all the derivatives and all the practices from banks. For some people, it's been an exaggerated reaction, and some people have even called back the Glass-Steagall rule. What do you think?
Well, I think that the situation with JP Morgan, I mean, I don't know enough about it in detail versus how much money they have or whatever, but I mean, a lot of people have said that it's a very small amount of money to a company like JP Morgan, but I think that the real issue here is the confidence. It's the erosion of confidence, again, in the investor, that again, something's happening that they don't understand and they don't know why, and it adds another layer of risk onto any time that they come into the stock market. So I think that's really the problem that I see. Whether they had an error or not, a problem or not, I mean, that's part of this business, quite frankly. You're not going to be right 100% of the time, no matter what you do. And it's just to what extent are you wrong, But they always say a good trader is one that can recognize a bad trade and get out of it quickly. So, they may have done that. And they may have done that. That number just is shocking, I don't know. But I think it's the fact that it scares people. And I think that's really the last thing that we need to happen in this marketplace.
Absolutely, especially volumes-wise. And it's very interesting, and it's such a difficult week. We have Facebook tomorrow, and the market, the timing for the market is really bad. But apparently there is still a lot of demand. In the last 48 hours, Facebook had to file again with the SEC, to up the size of the offer, and also, the price range. And some people now are saying that, according to CNBC, the maximum price could be 45. So do you really expect a boom tomorrow that can actually give a lift, at least for one day, to the market?
Well, I think first what people have to realize is that Morgan Stanley is the lead in Facebook, I believe, and I think the bankers are doing the right thing to raise the price. I think the worst thing that could happen in this market is to misprice this IPO. And I think what they're doing is the right thing to do, because you want people, when they buy an IPO, any IPO, whether it's Facebook or anything else, you want them to buy it as investors, not as traders. And if you price this thing low with a huge amount of pent-up demand and the stock opens up 10 or 20 points, everybody on the surface says, oh, that's great. But the reality is that people sell at that point in time because they've made 10 or 20 points, or whatever it might be overnight. Why wouldn't they? It's a great trade. But when you're a company, I think you really want people to buy your stock as an investor and stay with the stock. So I think the closer they price it to the price that it opens at, the better in the long run, really, for everybody, the market included. And I think what they're doing is the right thing to keep doing that. And then you'll eliminate the speculators as the price goes up.
Absolutely, yeah.
I think that's good.
Especially in such a huge deal like this one, you really want that.
Yeah, and you'll get investors. And if Facebook is truly the growth opportunity, people are not going to walk away for 5 points or 6 points or something like that unless they are speculators, So.
We'll see tomorrow. Thank you very much, Doreen, for being with us.
Thank you. Appreciate it.
E grazie a voi per l'attenzione. A domani.